Hey everybody, Jerome Maldonado. Look, in this segment, we're going to talk about why industrial warehouse space is the best financial opportunity in real estate over the next 5 years, and more importantly, how you can profit from it. It's funny, I see news publications, I see news broadcasters on CNBC and CBS and all the networks, and I'll read articles and I'll see little YouTube clips, and everybody kind of passes over it. They'll be like, this is the good market sector, like hotels are in trouble, motels are in trouble, and retail's in trouble, office is in trouble, and oh yes, P.S. by the way, industrial warehouse is a good place to invest. And it's like really quick when they run through it, but they're not focusing on why. And it's great that they're not, because it leaves the opportunity for investors to be more broad and to be more aggressive for a longer period of time. And so you guys have been hearing me talk about it. I've been preaching about it. I've been ranting and raving about it for the last year. Industrial warehouse space is the place to invest your capital right now and for the next 5 years and possibly the next 10 years. And so understand that where there is the biggest opportunity is when there's pivots in the market. And with e-commerce growth being more aggressive now than any other time in history, there is a huge need for industrial warehouse space. So I've been talking about how distressed retail is. And for the longest time, retail brokers had been in denial. And it's only until now that COVID has hit that a little light bulb has went off and people have sat back and said, oh my goodness, retail's in trouble. Well, retail was in trouble a long time before COVID. You look at the big brands, the big box stores, they have been struggling financially for the last decade. You know, the internet came out in 1996. We opened up a company called Go Shop the Malls, which is an online brand that we had put together years ago, 20 years ago. And we knew that the wave of the future in 2001 was that people would turn their buying powers online and be shopping on the internet. And so over the last 20 years, there has been substantial positive growth patterns with e-commerce. Now, when COVID hit in March, those numbers went up exponentially. So understand that this isn't something that's new. It's just that COVID stimulated it and sped up the process. And so last year, CNBC, a lot of the big CBRE, the big real estate guys had written articles, and they said, look, we're estimating over 1 billion square feet of industrial warehouse space will be needed over the next 5 years just to service and accommodate the growth of e-commerce. That doesn't have anything else to do with manufacturing, the automobile industry, regular growth. That's just to service e-commerce. So what is the true number that's needed? 1.2 billion, 1.5 billion, 1.3 billion, over 1 billion square feet over the next 5 years. So when I first read that article, we were already kind of thinking in that direction, knowing that e-commerce was booming. Knowing that e-commerce was growing substantially, we knew there was a need to service distribution, and they need regional distribution to get stuff to people's houses quick. And so the big business model is Amazon. Amazon has put Prime together where they do two-day drop ships. A lot of the big guys now are implementing that. So you look at companies like Walmart, you look at companies like Wayfair, you look at what Alex Mir and Ty Lopez are now doing with Pier 1 Imports, Radio Shack, and all the big name brands that have been acquired. Everything in the works has to do with getting people products at their doorstep tomorrow, putting it on their doorstep immediately and giving them the opportunity to buy online and deliver that product on their doorstep as if they almost went to a retailer, shopped for that product and had it drop shipped to them. Now, what does this have to do with real estate? Is that we cannot service that timely of deliveries without regional and local distribution. What that means for you is that you don't have to go out and buy a 200,000 square foot warehouse space. What you could do is take advantage of what I call the trickle effect of real estate. And the trickle effect of real estate, and this is how I've built my business. When I got started as a real estate developer, ladies and gentlemen, I didn't have a lot of money. I just knew that I was buying old buildings back in early 2000. And I was I couldn't find enough old buildings that I could renovate at the time because the real estate market has started thriving. And so I thought to myself, well, let me just start building new little retail centers. And my thought when I started doing that wasn't to go out and build 500,000 square foot retail malls. I was just the little guy making a living, getting small amounts of wealth developed by the big developers, the big machines. But you know what it did for me? It put me a portfolio together of $10 million in assets, then $15 million in assets, then $20 million. My net worth continued to grow just off of little properties. And for most of you out there that are watching this, over 97% of the population would benefit from over $250,000 a year in just residual income from cash flowing rental properties. And you'd be in the top 1/10 of 1% of all money earners since the history of Adam and Eve. And so understand that you don't have to be the big guy making millions. Now, if you aspire to do that, there's plenty of room at the top. We have now started to move in that direction because we've already exercised a lot of the small stuff over the years. But when I started with absolutely nothing. And so understanding that you can come in to a market sector like warehouse space and take advantage of the trickle effect. And right now, the trickle effect is let the Amazons of the world build the big, massive buildings. Let the Walmarts of the world build the big, massive buildings. Let the Ty Lopez Alex Mills, let us go in and buy the big warehouses that are needed to distribute for Pier 1 Imports and Radio Shack and some of the large name brands. And while we're doing some of that, take a look at some of the smaller warehouse projects and properties around interstate corridors where you can go in and semi-trucks can easily get off the interstates, pull into a warehouse, and then pull back out and get back on a major interstate. It doesn't matter what city you're in. It doesn't matter what main artery of major interstate that you're by. It just has to be someplace located by a main artery. And it doesn't even have to be in the central hub of a city. And so one of the big things is buying real estate that's inexpensive so that you can develop it inexpensively on the outskirts, or finding warehouse space that's already there, reposition it. Going in, and you'd be surprised, there's a town down south over here where I live where there's a ton of airplane hangars. And those airplane hangars are nothing less than just big metal warehouse buildings. And as people go out and they sell off their airplanes, they move on, those hangars become articles of real estate that are for sale. And so when you go in, you can purchase those airplane hangars on the outskirts of town that are right by big interstate corridors, right by little airports or larger airports. And you can go in and purchase these properties and reposition them for distribution or for manufacturing or whatever it is. Just understand that knowing that warehouse space, there's going to be a big need for it in all sectors, not just e-commerce, because I'll talk about the big need for e-commerce. E-commerce is the driving vehicle. It's the driving catalyst behind the warehouse growth. But understand that even though it's the catalyst, there's the trickle effect of other companies that still need it. We need mechanics that are going to need warehouse space. We do need hangars for airplane use. We're going to need warehouse space for manufacturing. We're going to need warehouse space for office and for small business owners. And then we also need it for distribution. And so if you could go in and take advantage of 8,000 square foot warehouse buildings, 10,000, 15,000 square foot warehouse buildings, one of the big things that you can do is set yourself up for that residual income off of small properties. Now, these properties can get acquired for $300,000, $400,000. So for under $500,000, you can start acquiring rental properties that lease nationally on average at about $6 per square foot. And that's an annual basis. So you take your square footage of 10,000 square feet at $6 a square foot, that building is bringing in $60,000 a year in rental income national average. Now, even if you take 80% of that and you're at $52,000 a year in rental income, you know, by the time you service your debt, the one thing that I love most about warehouse space is the cost to run it. I own big apartment complexes in the Arizona market, and I'll tell you that 40% of everything that we bring in, our gross operating income, goes out just to maintaining the property, mowing the lawns, landscaping, maintenance, toilets, roofing repairs, you name it. we have the expenses in all our apartment complexes, and our apartment complexes have done extremely well. But in industrial warehouse space and small retail, stuff like that, one of the best things that I love most about it is the fact that the tenant pays for almost all of the maintenance expenses. And so when you purchase industrial warehouse space, one of the big things that you have to understand is that there's minimal amount of expenses to maintain that property. If you go in, you have a solid roof and you have a solid structure, for less than 10% of all of your gross operating income, you can manage and maintain that property annually. And if you go in and renovate correctly, the first few years, it might even be less than that. And so you don't have a lot of out-of-pocket expense, except for servicing your debt, paying your property taxes, paying your property insurance, and then the tenant takes care of all the utilities. They take care of the water, the sewer, the electric. They take care of their own property insurance and rental insurance. And then they maintain the site. So when I have tenants, if I'm doing landscape maintenance to a warehouse building, a retail center, I divide it depending on how many tenants are in that building based on their percentage of occupancy. How much percentage of that space are they occupying when they're leasing out of that building? And then I charge them that percentage in what's called common area fees. And on those common area fees, they go in and they pay for the expenses that I would normally occur in a residential multifamily apartment complex. And so I can go in and charge them, if I'm paying $1,000 a month to maintain that property and they're occupying 25% of it, $250,000 in what's called common area fees on top of what I'm charging them for rent. And so one of the beauties about commercial rentals and commercial leasing in the industrial warehouse space is that the tenant typically pays for 95% of all the maintenance expenses, not the owner. And so warehouse space is where it's at. It's going to be the best unfolding market sector to invest in and capitalize on. You're going to see the big REITs. You're going to see the big investment firms going in and investing, and investment bankers right now. The big guys, the Merrill Lynch, the JP Morgans, the Chase, all of the big guys, they want in on the industrial warehouse space. What does that mean for you? Is to go in and take your piece too. You don't have to go out and have hundreds of thousands and millions of square foot of warehouse space. You can go in with just several thousands of industrial warehouse space that you take ownership of and change your life financially. Look, you like content just like this? Smash that thumbs up button right here below on the left-hand side and that big red subscribe button for more content just like this. And we look forward to seeing you next time.